gotta be flipping my flapjacks. Yesterday, Honest moves up 17%. Today, Planet makes this absolutely insane move. Here today, we got a lot to get into in this video, guys. I want to share with you not just what's going on there with the Planet, but I want to share some way bigger subjects than that. We're going to talk in depth in this video about something that's so important around pricing and the price you pay for a stock, essentially. And I want to show you through examples of me paying either bad prices for stocks or really good prices for stocks and kind of show you those examples, that I think is very, very important. We're going to talk about in this video if this is just a short-term, let's call it 1 month, 2 month rally, and we're going to have a much bigger crash here. And if we had a much bigger crash, like what it would take to take the whole market down like that. Because if you look back at 2008, we actually had a couple months that actually we went up very nicely, all to fall much further. And so we're going to talk about that in this video. I got so much more I want to talk to you guys about in this video. It's going to be an action-packed one. Took me a bit to prep this one. I hope you guys enjoyed as always. Thank you for joining me. And yeah, let's get straight into this, okay? Russell 2000 is now up over 10% from the lows. Another good day for the Russell here today. But yeah, up over 10% from the lows. And it just shows you like pretty much how quickly some things can turn around in the market, right? In terms of the pricing action. We still have the wall of worry up. We all know that, right? Inflation, Russia, Ukraine, potential either being in a recession or going into a recession. Like the wall of worry is still there. Let's be quite honest, right? But the market has put all that aside, at least in the short term here, and you see a 10% plus upward move in the Russell in a matter of just like, that's like the last 4 weeks or so. The NASDAQ has now moved up 12% from the lows. 12%. I mean, this is not a small number, right? 12%. But keep this in mind. And I think this is very important because you see these numbers and it's like, wow, Russell up 10% plus in a matter of a few weeks. Wow, NASDAQ up 12% plus in a matter of a few weeks. Keep this in mind, okay? This is extremely important for everybody watching this. The NASDAQ is still down almost 25% year to date. Okay, so yeah, it's been a nice kind of comeback over the last, let's call it 4 weeks or so, roughly off the lows. But the NASDAQ's still having a disastrous year. The stock market in general is still having one of the worst years we've ever seen, right? I mean, usually if you were in late July and you told somebody the NASDAQ was going to be down 25% year to date, they'd be like, what the heck happened? That's awful, man, because that usually just doesn't happen. There's only a few times in history you can ever see where the stock market went down 25% from basically the start of the year through late July. That's just factual. And so let's not forget for a moment here that the stock market has still been a disaster. It's just recently it's starting to get green and, there's starting to actually be some money made out there, which is a nice change in breath of fresh air, right? You look at a stock like Shop, right? In just the past few weeks, this stock has climbed 26% off its lows. That's was another 12% gainer here today in regards to Shopify, right? And this is one of those stocks that, think about this for a moment. If you bought Shopify, and I got some Shopify shares a few weeks ago, but I mean, it shows you how important the price you pay for a stock is, right? Because I mean, if you bought this stock at the beginning of the year, you're down almost 72% on those original shares, right? And I mean, someday Shopify can definitely be back up to those prices, but you're likely looking at years from now until Shopify gets to those sorts of prices again. That could be 2 years from now, 4 years from now, 6 years from now. We don't know, okay? But it's likely a while, right? And Shopify is one of those companies that definitely has the potential to, again, in the future, be a several $100 billion market cap, if not bigger than that. But with that being said, we can't deny the fact that valuations have come down massively. People are willing to pay much less for stocks than they were, 6 months ago, 9 months ago, something like that, right? And so, but if you bought Shopify recently, right, you're looking like a genius. You're already likely up huge on your position if you bought it over the past few weeks. But if you bought it at the beginning of this year, oh my gosh, like you're like, how many years until I get my money back in the stock, right? Oatly, I think, is a really good example, right? A stock I personally own. I mean, this stock has climbed off the lows 46%. 46% off the lows. I mean, it's just a massive, massive move. And so if you bought this stock over the past few months, you were likely making some really dang good money in this stock, right? You bought it a month ago, 2 months ago. You're making some really good money. And like, this is one of my accounts. I bought Oatly at a pretty darn good price in this particular account, and I'm up like 27% so far, up $11,800, right? So that one's going really well. This account's going decent. This account I also bought the dip in, and up 12% roughly there. I think that one's the public account there, if I recall, right? But in my main Big Dog private account, I don't know why, but I've never bought the dip or in any meaningful way, at least in this particular account, right? And so this account, I'm down 37% on my shares, right? 37% because I didn't buy the dip. Because if we look a little deeper, and I'll show you actually, basically this particular account, I started buying the stock actually is technically December 28th in this particular account, and I stopped buying the dip on March 24th in this particular account. So I bought it in the other accounts, right? And that's great, and it's going really good. But because this goes to show you, just if you're not consistently buying these stocks, ultimately your cost base is going to be not in the best place, right? And dollar cost averaging in the positions you love for the long term into those 10 or 15 stocks that you are the huge believer in, that the financials are running right and you think are going to get to great net income places and revenue places over the coming years and have a lot of future growth. I mean, yeah, you kind of got to go out there and buy the dip. Otherwise, you're just stuck in this position where you're going to likely be down on shares massively if you're not buying during a crash. Palantir is another good example of a stock like this, right? And I bought some Palantir shares a few weeks ago. But Palantir, this is a stock that's up, over 50% from the lows. Over 50% this baby's up. I mean, that's a massive move in a matter of a couple months from the lows, right? But if you bought the stock at the beginning of the year and you never bought the dip, right? You're looking and you're like, oh man, I hope someday I get my money back in this one, right? And actually make money in the stock because the stock is still down 45% year to date. And so it goes to show you how important the price you pay for a stock is, right? And how important dollar cost averaging is, because ultimately you might have thought Palantir was a great deal at $19 a share, right? You're like, this is going to be a $100 stock in 5 years from now, 10 years from now. I think their net income's going to this price. I think they're going to be able to command this type of forward P and this type of current P at that time, right? And blah, blah, blah. Cool. But the problem is if you only bought at 19 and you weren't buying at $6 and you weren't buying at $7 and $8, it's like, okay, you're still going to be waiting a bit here until it gets back to $19. It's probably going back to 19 and higher than 19, but you're still going to be waiting a bit until just break even. Versus if you had bought again at $11, right? Again at $10, again at $9, $8, $7, $6. I mean, you're in a much better, stronger position than anybody else, right? So this is why pricing is so darn important on stocks in buying the dip, right? Like it's one of the famous expressions, and it's one of the best, right? I got in at a good price. That's more being, I guess you can say, a little lucky than, the great expression I always remember is better to be lucky than good. Something like that. It's just a classic kind of saying, and it's true, man. In life, it's better to be lucky than good. It's just in the end, right? And sometimes that's the way it works out, and sometimes it's just not, right? Honest is a good example of a stock that, man, if you bought Honest over the past month or two, like you're making some good money. The stock is up 46% plus from the lows. That's a massive, massive move. But, I started buying the stock at a much steeper price than where it's at today. And although I bought the dip and dip and dip and dip and dip in this stock, I'm still down 33%. So, yeah, you could look like a genius if you bought Honest over the past couple months, and you might be up 30, 40% on your shares. And you're like, oh, man, Honest is the greatest stock ever. Me, on the other hand, I'm like, yeah, we're going to make money on this one. We're going to make a lot of money, but it's going to take some time to play out because we're down 33%. So we need this baby to come back in a big way over the next year or two and then start to actually make some good profits, right? And so, buying the dip's very important, but also what price you pay for a stock is very, very important. Now, I will say this, and I think this needs to be said in this sort of market, right? Because this is a very, very important thing. This year is a very abnormal year. Whenever you're in a crashing market, at one point the NASDAQ was down, 34% from the highs? Like, that's not normal. That's the furthest thing from normal. Like, the NASDAQ dropping 34% in a matter of months doesn't almost ever happen, okay? So this is a freakish year in terms of how much it matters to buy the dip and how much it matters to what price you actually buy a stock at and things like that. Very abnormal, but no matter what year you're in, it's always an important thing. This is just like that year on steroids, essentially, where you could have, it's the haves and have-nots. Some people are looking and they're like, man, I bought some stocks at some great price. I'm making a bank on these stocks. And other people are like, I'm still waiting for a long way until I get back to break even on this stock and actually start profiting. It's all about when you get in, right? And it's all about, dollar cost averaging, things like that. No, the market, I don't care if you care anything about ever owning Bitcoin or Ethereum. I think everybody should have Bitcoin and Ethereum on their watch list just to see where the financial markets are at in general in terms of their level of taking risk. And there's a clear correlation I've found between Bitcoin and Ethereum price and the market's ability to take on risk, essentially, in the overall financial markets moving into the stock market. And if we look at a stock like Ethereum, or not a stock like Ethereum, a crypto like Ethereum, for instance, right? This is up 51% in a pretty darn short amount of time, 51% off the lows. And so this is just clear correlation that, when the market feels like it wants to take some risk, Ethereum moves, and that baby moves huge, right? And so I just think those are important to kind of keep on everybody's watch list. Now, good news, very good news, okay? And just some markets are coming back. The other good news is the markets are coming back and oil's not coming back. So far, at least. It doesn't mean forever it's down now. But, as far as all the bullish stuff people had for oil is starting to dissipate, right? You have, rigs are they're getting more and more rigs. Like you look at how many rigs they have up and going now versus last year. Refining capacity, as far as that goes, they're maxing out everything they can do there. And so also, when it comes to the supply and demand whole equation of this, right? Huge travel summer. We all knew this. This was the revenge travel summer, they call it, right? The revenge travel summer where everybody wants to get out and about, do all those things, right? Shoot, man, it's coming up on late July now. Okay. So we got a few more weeks of this revenge travel summer. And then that's about it. That's about that whole game, right? And so you're starting to slowly get these, bullish catalysts you had for oil starting to go away. And it doesn't mean some can't come back or there can't be some sort of pump activity in the oil market, because at the end of the day, people think commodities is as simple as supply and demand. It is not, okay? That's the biggest lie that was ever told out there. There's so much speculation that goes on in the commodities market that move commodities in a massive way. It's insane, okay? And so, once you get educated on this, if you go to, an economics class, right, in college, let's say, your professor's going to say, okay, guys, commodities is supply and demand. If, the supply goes up and the demand drops, the price drops. Dude, it doesn't work like that. Although, in theory, it should work like that. In a perfect world, that would be exactly how it goes. It doesn't. There's so much speculation that goes on in those markets. Same thing in the stock market, right? You might think, stock price goes down, that means the company's doing bad. No, we see it all the time where a company's doing great and the stock price goes down. We see it on the flip side where we're like, this company's numbers aren't even good, but yet it pops on earnings. You're like, what is going on here? This company's not even in a good place and the stock's price is going up, right? There's a lot of speculation, obviously, on all the overall financial markets, but this is very good to see as far as the economy, because at the end of the day, we all know the higher oil price goes, the higher gasoline price goes. The higher, prices people pay for gasoline, at the end of the day, it takes money out of their pocket that could be spent at the restaurant or at the mall or online or whatever, right? So, yeah, no one really likes to see that, right? Now, somebody in the private stock group shared this today. I totally didn't get to see this one. I think this is very important, though, for everybody that owns the chef stock out there. Embattled Amy's Kitchen closing San Jose plant. They're citing economic woes. But let's just be honest. Who's the main competition for Amy's? It is a company named The Chef, okay, Tattooed Chef. And, just from what we see, the Chef is taking massive market share. And at the end of the day, think about it like this, right? The Chef's on their way to becoming $1 billion revenue company, right? The $1 billion has to come from somewhere. It's going to come out of the competition's pocket in a massive, massive way. That's just bottom line there. This company's already about to do several $100 billion a year in revenue. That several $100 billion of revenue doesn't just come out of thin air or something like that. They're going to take market share, right? If somebody's going down the freezer aisle, they're going to be like, you know what? I like this Chef brand. And so they're going to buy that product, right? And that's exactly what we've seen playing out. And so, for the Chef's competition, there is no competition from what I've seen in that market. They're all playing a whole different game, and the Chef's in their whole own league. And that's just, when you got a company that's just on like the Chef's on, whew, it's a different thing. The stock price doesn't tell the story. The stock price looks like, it's not doing good or something like that. And then just wait till the margin story comes around, the profitability story comes around. It's going to be a joke in the end. And so, that's just all has to play out. But we're starting to see the early signs of what's going on there. And you see this when there's a company that comes in, they're dominant. Other ones fade and other ones get hurt in a meaningful way. That's what's going to end up happening, okay? And every industry goes through that. Every single industry where there's a company that comes up and just shakes the whole thing up, and it's exactly what we see playing out, okay? Yeah, blame it on the economy. No, you're getting your lunch eaten, okay? Getting your lunch eaten, Amy's. S&P 500 index. So a lot of people want to look at this and say, are we in a moment in time that we're just getting the short-term rally and then it's going to be a massive drop lower, right? And so, because this is what happened in, the great financial crisis, which summer of '07, we peaked on the market and then started drop. Then it came back for a couple months there and then just, pretty much down and out from there, right? Now, let's not forget why did the market just make this insane let's call it last hurrah drop for about almost a year straight, right? 10 months or so, that last just painful drop where it bottomed out finally in February '09. The reason it made that massive drop is not just because the economy completely fell apart and unemployment went through the roof and the amount of job losses, went to insane records and bankruptcies and the whole housing market collapsed. The other huge reason why the market dropped so substantially was what happened on Wall Street. When you had that many banks, investment banks, and things like that go under, the level of fear went to levels we've honestly never seen. And you can look at the VIX during that time. It went through the roof. So there was a whole different situation. So if you want to talk about, the NASDAQ, the S&P, those sorts of things going down to those sorts of levels, going down 50%, you have to have the whole financial system collapsing, right? Not just some crypto brokerages, exchanges went under or something like that. You need to have the whole financial system collapsing. Lehman Brothers, AIG, Salomon Brothers, Fannie Mae, Freddie Mac. What happened in that was a historic moment for the overall financial markets in terms of companies going under that just no one ever thought this would happen, right? In terms of some of those companies that went under. That was an insane situation. And then the rest had to be, even Goldman Sachs and Morgan Stanley and all those guys had to get a lifeline thrown to them to stick around. And the big banks, right? Look at what Buffett did with Bank of America. And I think he loaned them, $5 billion, something like that. And he made good return on his investment there. So there was a moment in time where very historic. And so, yeah, sure, could this just be a 1 or 2 month rally and then we go for a much bigger drop? That's absolutely a possibility. But you need crumbling in the overall financial system. You need massive deterioration in the overall earnings of companies. I'm talking about massive. I'm not talking about companies' earnings are down 5% or 10% or something like that. I'm talking about companies that were making huge profits start losing money, because that's what we saw in the great financial crisis. I'm talking about companies, EPS falling 50, 70% year over year, because that's what we saw in the great financial crisis, 90%. That's what you need to see in order to get the market to go down 50% plus, right? Because we know the economy doesn't stay down and out forever, and we know that if the economy gets in real trouble, the Fed comes to the rescue, as we know, right? And so that's just something to kind of keep in mind if you're thinking, and I know a lot of people think that, right? They're like, well, could this just be a fake out rally? We're back much lower. It could be, but we need economic devastation to get a 50% drop in the indexes, okay? And if you don't get that, good luck getting that 50% drop, okay? Now, in terms of Planet, BR, thank you for sharing this. BR is one of my favorite private group members. I mean, that man's a detective. He's always on everything, everything. Stuff in the real world, stuff on the internet. And we found this in regards to Planet. So basically, the Senate is, there's a Senate bill that's supposed to, federally legalize the product. And it's expected to be introduced very soon here. So that's very good news. That's a huge step in the right direction. It does not mean, things are going to magically be federally legalized tomorrow or something like that. It's not happening, but it's a huge moment for the entire market. And it's the most bullish thing we could possibly have for the financial markets. And, if we get to that moment where we can actually get federal legalization, it's a game changer for all the companies that compete in that space. And I mean, a lot of those stocks will fly double, triple, in a snap of fingers if we get to that place. Now, what will likely happen is there will probably be a run-up in a lot of those stocks prior, as it gets more and more serious and as it looks more and more likely that there will be federal legalization, a lot of those stocks in that space will probably move up going into that. And so, it's one of those things that when it actually happens, it might not actually move the stocks at all because it will already moved them up so much. We've seen that play out many times in other sectors when there's so much excitement that's built up, the stocks move up into that excitement, then the news finally comes in, the good news, and then the stock actually moves down, right? Or the stocks in that sector, and people are like, what? It's actually happened now. How's this stock moving down? That's what we see. It's, what do they call it? Buy the rumor, sell the news or something like that, It's just a thing in the stock market. So yeah, I hope you guys enjoyed this video. As always, I might do a in-depth Tesla video later tonight. We'll see what happens with that. If you're looking to join us in the private stock group, you're looking to access all the course curriculums, understand exactly how I invest, how I run my portfolios, everything I look for in stocks, and also access the 6-figure, 7-figure Discord chat and all those sorts of things. Check out the pinned comment down there. Apply to join us in the private stock group. Much love as always, and have a great day.